Yeah, no, thanks very much, everybody, for your time here. And it's a very interesting time for Calibre Mining and a company that you see on the screen here, Equinox Gold. Very recently, about a month ago, Equinox Gold and Calibre announced a merger, a business combination to bring the two companies together, creating a major new gold producer. As you can imagine, I will be making some forward-looking statements. Please do take the time to read some of the fine print. It's also, of course, available on our website. But bringing these two companies together is a very exciting time in our sector because of, obviously, the high gold prices, but also because of what the combined company looks like and can do together. What this will be a significant powerhouse in Canada, a Tier 1 mining jurisdiction. So you'll see in some of the subsequent slides that as we ramp up two key Canadian assets, we'll be at approximately 600,000 ounces of annual gold production coming out of Canada. The strength of the leadership team, Greg Smith will retain CEO and Director. Calibre's President and CEO and Director, Darren Hall, will move over to the President and CEO role. So together, these teams and these assets will unlock a lot of value, I believe, for shareholders. I'm going to give you a little background on Darren, and it's important because when we look at Calibre's trajectory over the last 5 years, we've merged with a few companies, we've acquired assets, and year over year, since becoming a gold producer in 2019, we've delivered on expectations. We've met or beat our quarterly production outlooks, our annual production outlooks, and so we've built a very strong trust relationship with the street and the marketplace. Darren comes from a company called Newmont. I'm sure some of you have heard of the company Newmont before, one of the largest gold producers in the world. When Darren left Newmont in 2014, 2015, he had a significant role. He had worked there for 35 years and had learned and optimized assets around the world. But when he left, he was overseeing approximately 15,000 to 20,000 people, employees and contractors, and he was overseeing about 9 or 10 major operations in the Newmont portfolio. He was overseeing what represented about 50% of Newmont's EBITDA. So he's got a tremendous amount of expertise, a tremendous amount of experience. What he brings with him, and he will bring with him that culture, that experience into this opportunity. And I have no doubt that when Darren overseeing all of the operations, all of the exploration, the development, permitting, sustainability, that it will tremendously unlock value for the combined companies. Now, what does the company look like on a combined basis? As you can see here, we have assets in 5 different countries. We have 9 mines that will be in production when the business combination completes. One mine, the Valentine Gold Mine, which is a Calibre asset, has been in construction for the last few years. We're now just turning the corner. We're finalizing construction. We are expecting to be in gold production during the second quarter of this year. So within months, that asset will start producing gold. The Equinox cornerstone asset is called the Greenstone asset, which I'll talk a little bit about. It became a gold producer in May of last year and has been ramping up to nameplate capacity over the last 12 months. So we've got 2 low-cost, long mine life, key cornerstone assets in Canada, which I believe, as we ramp up to nameplate capacity, will help continuously unlock value for the combined company shareholders. This year alone, when we combine the two companies' outlook, will be about the midpoint of production guidance will be about 950,000 ounces of gold. So a significant powerhouse and a significant amount of that production coming from Canada. There's a trend and a pathway. Once both the key cornerstone assets are in full nameplate capacity production, we could see a path to 1.2 million ounces of annual gold production. And we would anticipate that lowering the all-in sustaining cost to produce ounces of gold. So a very attractive proposition. Here's one of the key metrics we look at when we look at creating value for our shareholders. It doesn't necessarily mean holding on to the reins as tightly as we can all the time. We look at ways to financially engineer deals and we look at peers and what are their valuations and trading metrics. So by putting together these companies, you can see there's a path based on analyst consensus numbers to about this is cash flow, sorry, no, production. Production is about 1.3 to 1.4 million ounces a year over the next few years. That's the average analyst consensus number. When we look at, for example, a peer called Alamos Gold, Alamos produces 500,000 ounces approximately in Canada, with the remaining part of their production profile coming from Mexico. So a diversified miner, but mostly from Canada, a tier 1 mining jurisdiction where the combined company Equinox and Calibre's assets will predominantly be about 600,000 ounces a year, as mentioned. So we have larger production coming out of Canada, and we have an opportunity here to unlock tremendous value. As you can see, the market capitalization today on a pro forma basis, of course the deal is not closed yet, is about $4.9 billion US dollars. So a fairly large company already in its own right. But if you look at Alamos or even Kinross, for example, there's an opportunity to bring this to a 10 to maybe 15 billion US market valuation when we look at our peers. Now, this isn't going to happen overnight. This is going to take time to integrate. It's going to take time to see the ramp up of those assets. And it is going to take time to build the confidence and trust of the marketplace, but a tremendous opportunity. Given we only have 10 minutes, I'll probably talk a little bit about, I'll leave this up on the slide deck. There are other slides here, and if you want to come by, M41 is where the booth is. But just looking at the metrics here, you can see on almost every metric, there's a very compelling case for it'll be new Equinox Gold. Equinox is the primary percentage owner of the company, so they'll be 65%. Calibre will represent 35% on a pro forma ownership basis. But nonetheless, you can see all the opportunities for this company to re-rate upon successful closure of the deal. The shareholder vote will happen April 24th, and we would anticipate that the deal will close weeks or shortly, or potentially up to a month or two after the deal gets voted on and approved. So I welcome any questions, or if you'd like to come by booth 40, M41, we can talk more about the business combination, Calibre Mining, and Equinox Gold. Thank you very much.